What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we're going to be speaking about Meta stock and ask ourselves the question, is it finally time to buy this company that has crashed to the ground, to levels we have not seen since 2018? In order to try and answer that question, we have to ask ourselves quite a few questions. The first and biggest one being, why is Meta finally taking this huge fall from grace? What is the primary reason for that? And there are quite a few, and it doesn't come without justification. So we're going to be speaking about quite a lot of things, so strap yourselves in, my friends. If you are not aware, not too long ago, Meta's market value plunged by $230 billion in one day. The single biggest loss of any US stock in the entirety of the stock market's history. And if you want to know what that looks like on a stock chart, it is right here. This dropped from about $327 a share all the way down to $238. And it only continued to get worse for Meta since that drop, the worst there ever has been. They have gone all the way down to currently $134, being as low as $122. And if you let me zoom out just a little bit further, you will see that these levels have not been hit since all the way back here. All the way we have 2018 levels. So why did this even happen? Well, fundamentally it comes down to this. Meta reported earnings. There was a revenue miss and forecast second straight quarter of declining sales. Now, when you look at the history of Meta as a whole, this does become really, really concerning. So Meta missed on the top and bottom lines and gave a troubling forecast for the third quarter. The shares lost about half their value this year, and now it's much more as marketers pull back on ad spending. And the company said its guidance reflects continuation of the weak advertising demand environment. Now, when we speak about Meta, such as when we speak about YouTube, when we speak about TikTok, when we speak about any of these huge social media platforms, you have to remember that the money comes from advertising. That is where it is. We are the product of these social media sites. But why this was such a big deal is if we look at Meta's annual revenue from 2009 to 2021, you can see a quite clear, extraordinarily huge upward trend here, and predominantly there has never been a downward quarter or a downward year. And so they missed on EPS by a considerable amount. They slightly missed on revenue. Their daily active users weren't as good as expected. We'll have a look at that now. Monthly active users, again, slight downward move. And average revenue per user was somewhat in line with expectations. This one is a very, very important one, though. So if you look at the number of daily active users, again with Facebook, going back to 2011 here, you can see it has constantly and truly constantly been going up. And if we just zoom in on the last, couple of years, the end of 2018, you can see, for the first time ever, there was downward movement here. Now, it was a very, very, very small margin, and I think a lot of people are somewhat blowing out of proportion. But again, the first sign of a company stopping growth and stopping being able to grow, which is a genuine concern for Meta, people are obviously going to get scared. One thing about Facebook and about Meta is they have always grown extraordinarily quickly. They still are the single biggest social media site in the world as of right now. And that's just Facebook. That's not Meta. Behind them, we have YouTube, and then we again have Instagram, and we have WhatsApp. Meta is on top. But when we look again at the monthly active users here, they have always been going up. Despite the fact that they're at 2.7, 2.8 billion, they were still finding a way to grow quite quickly. And then we finally see a negative movement in monthly active users. And again, it's only 0.07%, but that still is enough to warrant people, getting concerned. One of Meta's biggest problems right now is how big they've got and the lack of people in the world. Nearly everybody who has availability to internet access or to Facebook access has an account at this stage. Now, with that being said, if we take a look at Facebook's advertising reach, so the total potential audience reach of ads on Facebook with relative growth rates over time, that still is climbing, which is potentially just as important as the active user number, because again, this is where Facebook's revenue is going to come in. And this is what we're going to speak about right now. What's the average age of Facebook's users in 2022? And this is so much more important than you may realize straight away. Do young people still use Facebook? Young people are starting to go to other apps much more so than Facebook. The mean age of the Facebook user now, I believe, is about 31. Their primary demographic is the 25 to 34-year-old. Their advertising audience profile, you'll see, is pretty much from 18 through 34-year-olds. It's the primary ones, 35 to 44-year-old being quite large as well. But we are seeing a downtrend in young people using the app. We are seeing them leave to go spend their time elsewhere. And Facebook has just been the giant, the biggest platform for so long now. They have to keep up to date with the times. I've created this little infographic thing right now to take a look at some of the biggest social media platforms, okay? So first, in the top left corner here, we have TikTok, okay? That is short form content. I assume most of you watching this video at this stage do have TikTok. It has absolutely blown up over the last 2 years in particular. And that's what TikTok is. It's serotonin. It is endorphins getting released. You can swipe on it for hours, watching little tidbits of content. You don't even really have to follow people on it, and you're still going to get the content you work. But that's what they are, short form content. Let's say the majority of it, sub 60 seconds. Now, you can have longer videos on there, but people don't go to TikTok to watch half-hour long videos. Approximately 1 billion monthly active users, and their expected 2022 revenue is 11.5 billion. Now, considering how young TikTok is, specifically outside of China as of this moment in time, this expected revenue is absolutely huge. And having this amount of monthly active users at this stage is absolutely huge. And they have shown single-handedly that short-form content is essentially the short-term future, at the very least, of content being absorbed online. Then we have YouTube, which is longer form content for the most part. They have taken a page out of TikTok's book, as Facebook has with both Instagram and the Facebook apps, and they have introduced YouTube Shorts, which are again becoming widely popular, and they are incentivizing creators to get involved in Shorts. They are putting more money towards them and whatnot, because it's such a big form of content right now. Now, YouTube has approximately 2.5 billion monthly active users, and their expected 2022 revenues are about 31 billion. But you know straight away when you open up TikTok, you expect short form content. And if you go to YouTube, you're expecting longer form content, unless you're going to YouTube specifically for shorts. Then we have Instagram, okay? So keep in mind this is owned by Meta, the people who own Facebook. Their primary thing forever has been images. Now, I believe right now videos make up something like 18 to 20-ish%. That number could be wrong. It's just off the top of my head of the majority of pages. But they are creating, again, a new focus on Reels, which are essentially short form content, which are essentially TikTok. That's what they are going for because of the hugely popular nature of it right now. Now, they have approximately 1.5 billion monthly active users, and their expected 2022 revenue, I apologize, is about 50 billion plus. Now, I have to say, guys, the numbers for Instagram and Facebook here are both at 50 billion plus. There is so much conflicting information out there, and analysts really can't seem to agree whatsoever on what they expect here. Instagram hit about 46 billion in revenues last year for Meta, making up over 40% of their income. They have grown so quickly. But that's Instagram. So, you know, they've always had the images. And if you take yourself back probably anywhere from 6 to 8 years ago, this was huge. And there wasn't TikToks and there wasn't short form content on YouTube. The images were the short term content. And then we have Facebook. So the actual Facebook app. And they can only be described as a jack of all trades. And this is turning into an issue right now. For the longest time it wasn't. But right now it is. If you want short-term content, you're going to TikTok. If you want to catch up with family and friends, take a look at pictures, you're going over to Instagram. And then, you know, if you want your longer form content, it's much easier to find the content you want on a platform such as YouTube than it is on Facebook. So they have everything. They have short-term content or short-form content. They have long-form content, medium. They have images. They have absolutely everything. And that is actually becoming their downfall to an extent. They don't have a unique selling point like the rest of these apps. Now, what they want to do to recapture that younger market is the metaverse. And that's what they're spending a lot of their time and energy on right now. And a lot of people see this as a bad thing. And then there's a lot of people who see it as a good thing. Now, in my opinion right now, if I am to invest in Meta, I'm actually not even investing in Meta for the metaverse just yet. I watched an interview recently and one analyst was saying that, you know, the metaverse is free right now. And I don't agree with the fact that it's free because a lot of their money is being pumped into it and it's going to make their balance sheet look slightly worse. It's going to, you know, it's not free, but it's not the primary reason to invest just yet, in my opinion. But again, guys, I want to point out they have approximately 2.9 billion monthly active users, somewhere in the realms of 1.8, 1.9 billion daily active users. And again, expected 2022 revenue, take it with a pinch of salt, but let's say 50 billion plus. Their 2021 revenue for Meta altogether was 117 billion. So this is where the issue lies for Facebook right now. This is where the issue lies for Meta as a whole. They don't have a unique selling point. Now, obviously, they do own Instagram, which does to an extent, but again, they are getting pushed out by the likes of TikTok and YouTube. That's why so much focus is being put into Reels right now. Also, advertising spend has been tough lately due to a lot of small businesses having to cut costs wherever they can. And you might not realize it, but the biggest chunk of Facebook's 70 billion ad business, this came out in 2020, comes from small businesses, which account for nearly 75% of its annual ad revenue, according to Deutsche Bank. So again, that's why we're going to see, revised EPS going into this coming quarter and the next quarter, even though generally speaking, November and December are the best months for these social media companies. That's where, advertisers have to get rid of their yearly advertising budget. But with a lot of that money coming from small businesses who are struggling right now still from inflation, from Roni consequences, from a lot of things, people not spending as much, inflation going up so much, they can't spend as much on advertising. Now, this isn't just against Meta. This is also going to affect Alphabet when it comes to YouTube. This will affect, TikTok. It will affect pretty much any social media site that makes its money from advertisers. Now, with that being said, Facebook's asset to liabilities are still absolutely fantastic. They are in such a good position. They can afford to pump all of this extra money that they have made over the last decade plus into the likes of the metaverse. With that being said, they also are cutting costs in a lot of places, which again can be seen as a good thing or as a bad thing, depending on what point of view you wish to take. Now, their PE ratio, is currently sitting at 11.11. So the average for the S&P as of this moment in time is somewhere in the realms of 20. So you would be led to believe that Meta is trading at a steep discount. And I bet if you went to pretty much anybody in 2018, and said to them, would you buy Meta at a 10 or 11 PE? Because they have always traditionally had a very high PE in relation to the S&P and to peers. A lot of the time trading at a 30 price earnings valuation. And now they're down at the 11, approaching single digits once or twice. And given the way the stock price is going right now, these guys could well dip into the single digits for PE. I'm not fully convinced the absolute bottom's hit for Meta, but what I do know is you're buying it at a huge discount compared to even 6 months ago. Now, analyst ratings as of right now, we generally just have buys and holds, We don't really see sells, we don't really see underweights, but you can see annual earnings estimates here are very, very low compared to what 2021 even was. They are expected to get better in 23 and 24, but the low ends are staying down, which is going to be scary for investors. Yeah, it's not looking like it's going to be a quick turnaround. So when we look at this stock chart, you can see it's just always been nice, steady upward move. We had the 2018 crash, and again, there was some huge upward moves. The 2020 Roni crash, and again, huge upward moves. And then this is quite clearly the standout point on the chart, going from highs of $385 all the way down to $121. I mean, if you did manage to short at the top, which I don't think anybody really did, it's down 67%, my friends. It is absolutely huge. And I don't think you're going to catch the reversal anytime soon. I will say that. Do I think dollar cost averaging for a long-term position in Meta could be a good idea at this stage? Honestly, yes, and it's one that I am looking to start adding to slowly. I'm looking to add to a lot of these blue chips that are at steep discounts compared to, early 2020 prices or even mid-2021 prices. But that is why Meta is down so much as of right now. It's also, they've gotten so big, guys. You need to remember this. There's only so many people in the world they can get to use their platforms, and it becomes more and more difficult to do that every single passing day for Meta. But that is my current thoughts on these guys. If you watch this video all the way till the end, you, my friend, are a true legend, and I really do appreciate you being here. From the bottom of my heart, your support means the world to me. If you did enjoy and you watched all the way till the end, please could you hit that juicy like button, maybe drop me a comment down below, and subscribe if you're new around here. All of that would help me out so much. But anyway, guys, I hope you all have a beautiful, blessed day. I will see you for another video very soon. Peace.